Good morning, this is Jim McCormick with Allendale's Morning Coffee for Wednesday, February 8th. Well, we've had another interesting trade night overnight last night, folks. The corn and wheat market were under a little bit of pressure after yesterday's run-up, while the bean market continues to find some strength. There's a couple things that are driving the market that I'm looking at right now specifically. On the big picture, we're seeing kind of some macro buying going on. We saw it across the grain complex as well as some of the other markets over the last few weeks and months. And what that is inflationary buying. We're seeing money just being invested into commodities as a sector investment. With the Fed interest rates, inflation index pushing around 2.5%, their target rate, you're seeing companies, or specifically investors, come in and investing in commodities. They view commodities as a cheaper investment compared to stocks, which are pretty much trading at all-time highs. If Trump's economic plans kick in, they're feeling from a lot of economists we'll also see some inflationary increases around the world, and that also traditionally is friendly commodities, and that is also fueling some of that buying. On the smaller picture, what's going on is we have the big WASDE report that gets released tomorrow morning. And we are looking for a slightly friendly report, plain and simple. On the corn number, we're looking for the corn carryout to drop from 2.355 billion bushels to 2.335 billion bushels. So about a 20 million revision. Nothing dramatic in the big macro picture, but also slightly friendly. On the bean side of the equation, we're looking for the carryout to drop from 420 million down to 410 million. Also, a relatively small drop in the big picture, but the bulls are kind of excited about this because this is the trend we saw the government do last year. Each month they just continued to raise demand on lower ending stocks until we ended up with a carryout below 200 million. Now we don't anticipate that to happen this year, plain and simple. South America had a production problem that we do not anticipate them to have this year, as well as we have double the carry-in right now, not to mention the government is much more aggressive on their demand estimate than they were a year ago. As for South America, that'll be the big number. We are anticipating them to lower the Argentina crop a little bit. The corn, maybe 500,000 metric tons. The bean estimate, though, average guess is 2.5 to 3.5 million metric ton decline in the beans due to the flooding earlier this year. The wild card, I think, is what will they do with the Brazil crop? Their average guess is for just a slight increase in the Brazil corn number. The fact is they're just getting ready to start their second planting season for corn, so they usually don't make big adjustments on the corn. It's the bean number. The average trade guess is a slight increase from 104 million metric tons to 104.2, just essentially a very slight increase. That's the average trade guess, but you hear a lot of people in the industry talking, a lot of weather groups, trade groups out of Brazil talking a 106, 107 crop. Now, if that crop does push to 106, 107, that will more than offset the decline in Argentina. It'll keep world stocks at astronomically high levels. On top of that, we are continuing to argue here at Allendale that we are going to see an increase in acreage as we go into the planting season of 2017. We're going to lose some corn acres. We're going to lose some wheat acres that go to beans, and that's going to keep a bearish picture no matter what the report says tomorrow. On the corn side of the equation, the corn could get a little bit of a bump as we add in the long-term picture as we talk less acres going into planting. But tomorrow, in general, it should be a relatively mild report corn-wise. On the livestock side of the equation, the market will be watching the electronic cattle trade that starts here at 10 o'clock and see where they trade at. We pretty much traded cattle at 119 last week. We have a smaller show list this week, so we'd like to see them hold 119 to kind of keep this market intact. Technically, we filled the gap yesterday on most of the contracts, so that was the first objective for the bull to fill. We filled it. Now we'll see if we can accelerate through it depending on where this cattle trades. If you guys have any questions, please call your Allendale brokers. Have a good day of trading.